Hello everyone, welcome back to my YouTube channel. I'm gonna start a new video series. It's called How to Invest or Trade in the Bull Market. In today's video, I'm gonna touch upon on trading psychology. I'm gonna use Tesla and Apple, their stock split as example. I'm gonna share with you my thoughts behind how I trade right after the both company announced the split, as well as before the final split and then after the split. I'm gonna share the thoughts and my trade strategy, how I executed those trades. In the bull market, the money is moved to growthier sectors, means whichever the sectors has the most growth potential, money goes there. If you like to focus on only value stocks, then it doesn't really pay you because you put in tons of money and time, but it doesn't pay you at all. So most of the fund managers or institutional buyers, they will focus on the growth stocks. So you needed to also switch your focus to buy those reputable mega cap stocks that has big growth. So in that case, in case you get in the wrong time, you bought at the highest high, still you have great chance to get out, because how high the stock price can go is really depend on how high the next person is willing to pay the money. So it is sometimes nothing related to fundamentals or valuation. The price can go up is because more buyers than sellers. Then the price will continue to go up because there is a demand there. When there's a big bull running on the Wall Street, you shouldn't fight it. You should run with it. There's a saying, when you can't beat them, join them. Pretty much sure you heard the word saying FOMO, fear of missing out. Right now there is another word called MOMO, meaning you're missing out the momentum. Think about that. If you're not participate in this bull run, the upper trend, you are missing out so much potential capital gains in your portfolio. Before I start, please smash that like button and give a comment to help with the YouTube algorithm. And also please subscribe and hit that notification bell and set it to all to receive all my future videos if you have not already done so. And please watch partial of the advertisement that whatever YouTube plays in this video. That's the best way to help me and help my channel to grow. We all know the stock split doesn't change the fundamental of the stock. Neither does it change its valuation. But just like the Fed injected unlimited support to the stock market, Fed provided unlimited liquidity. The stock split also improved the liquidity by tenfold. Stock split lowered the bar for many individual investors that they can afford to participate in trading of Apple and Tesla. That greatly improved the liquidity. For example, Apple today traded at around $130 per share. Only 3 days ago, Apple was trading above $500 per share. Tesla today is trading at $438 per share. Only 3 days ago, it was trading close to $2,500 per share. So more and more people can participate, and then that lifted the Apple stocks and then Tesla stocks by so much. Apple right now, the market cap is equal to the entire Russell 2000. Apple only took 2.5 weeks to reach to its $2 trillion mark, and also took another 2 days, added another $130 billion to its market cap. And then only 3 days after this week, it reached to $2.25 trillion. Another $120 billion was added to its market cap. Tesla, on the other hand, only announced its stock split on August the 11th. At that time, Tesla's market cap is around $348 billion. Only it took Tesla 3 weeks. As of today, the market cap reached to $408 billion, added another $60 billion in just 3 weeks. Right now, Tesla's market cap is more than 5 other major car companies in combined. Remind you, Tesla only sold around 360,000 cars back in 2019. The other 5 major car companies sold about 4.4 million cars. How can you reason that? So on August the 11th, 5 p.m., after the market is closed, Tesla announced a 5-to-1 split. And then I jumped out of my couch. I was doing some testing. 5 minutes late. I was 5 minutes late. All right. It was trading at 1378. It jumped 5 minutes, jumped to 1464 or 65-ish. And I set up a limit price and I bought it around 1462, 5 shares. At that time, I was thinking my full position will be 10 shares, but I'm only gonna get in 50%. So I put out a video to announce that 5-to-1 split in about within 2 hours. I heard this news. That's the fastest YouTube video I ever made. But I received a criticism from one of the viewers saying stock split doesn't change the valuation. Why you have to get in 5 shares? Because I'm pretty much sure he did not watch my video, because at that time I saw this RSI and then MACD. I saw very good upward momentum because MACD is oversold and then RSI was just a little bit under the 50% line, and I see a big upward momentum is coming. So I didn't say much to him. I don't want to offend him or something. So I just said, you know, for long-term investing, doesn't matter when you want to get in, as long as you get in. From second day, stock price going upward very sharply. So I still hold on to it, and then I gradually adding some shares here and there, here and there. On this day, I saw a bearish candle forming, and also I saw the RSI is reaching to almost above 80% line, and I made a video warn everyone, try to set up the stop loss, try to protect the profit, because I see the momentum is still going upward because people are getting more greedy and greedy. Doesn't matter FOMO or MOMO or ELMO or JOMO, anything kind of mo, just get in, right? So I try to warn everyone. In the meantime, set up the protection myself and add more shares. And then until this day, on the split day, and I see the RSI is already above the 80% line. And I told myself, you know, stop being greedy, you know, because this trading psychology is people holding on to their shares for too long. If they hold the shares for too long, too greedy, then they will get caught up on the downward momentum. So I sold whatever the shares I have. The most gain I had is around 65%, and then the rest of them are still very decent gains. So I was very happy. And then on that split day, and I trade more, multiple times more to gain more money on that day. But on this day, which is yesterday, I stopped trading because Tesla announced that they're gonna sell about 5 billion worth of stocks to try to capture their gains. Try to raise some cash for the company. I don't blame them. They should, all right? Around 2,500, that kind of price range, if you don't sell, it's kind of stupid, right? This is the best way to raise cash that way. So I just wanted to see how this RSI and then MACD gonna go. If the MACD cross the red line, which is a bearish cross, I will not trade for a while. When you trade any stocks, doesn't matter how much the momentum is, you still need to know how to protect your gains. For Apple, I pretty much did the same thing. Right after the earnings report, right after they announced the stock split, I traded some, but I bought 30 shares, put in my Roth IRA. I try to hold on to it. So I hold on to it, got the dividend payout, and then still hold on to it. And then I got 120 shares as of the stock split on this August the 31st. So on that day, I saw the RSI is reaching to 80% line, and I decided to sell all those 120 shares. So I made a quite decent percentage earning. So I'm very happy about it. But only the second day, Tuesday, I see there's a big gap up. The stock price still going upward. And I saw the RSI is above 80% line by then. So I wasn't feeling secure to put in large quantity, but I was trading the whole day. And then at the end of the day, I bought 30 shares. I did not want to sell. I want to see what's going on for the second day. So the second day, which is today, this morning at 8 a.m., I sold almost at the highest position, $137, around $137 after the split price. So 137 times 4 is equivalent to $548 before the split. So I was thinking, that is too high even for Apple. So I sold it. I sold the 30 shares. I realized the gain and I was happy about it. And then the whole day today, Apple was going downward momentum. Is like an L shape, and same as Tesla. And it's a little bit better than Tesla, but still not too good. So for now, I'm gonna wait and see the next entry point. I'm not gonna trade or buy for the big quantity. So that's for Apple. In conclusion, in the bull market, I will focus on chase those mega cap growth stocks other than smaller cap or value stocks or penny stocks. I will never trade penny stocks anyways. So that's my thought. And then as of Apple, it still will have big upward momentum in October because it will release its 5G new phone by then. For Tesla, its PE ratio is over 1,100. That is way too expensive. So as Apple is over 40. Apple usually is around 17 to 19 PE ratio. Right now is 40. So both of them are at highest high. So I'm gonna wait and see for better entry prices for both of them.
Excuse me, pardon me, my lover, my doll. I like the way the fragrance brings out her perfume. As for my coffee, no need for sugar. The word is sweet enough when she is in the room.